Hello, everyone. I hope everybody had a very nice Christmas. I did on my end, and I finally saw Star Wars The Force Awakens. Very happy overall. And on the short term, what appears to be happy is the market. However, what I'm looking at right here, knowing what I know about the 2015 action, all the V shapes, and then what led to the August sell off to what we have now, this is one of the most oddest looking technical patterns I've seen in the indexes in a while. It's not that pronounced on the NASDAQ, but I want to show you that this V-shaped sell-off once again was punctuated with heavier volume. That V-shaped rally volume fell each day in the rally. Then we had the big sell-off right back below the 200-day moving average. I know options volume, swayed it a little bit, but still, it happened. And now we've had 4 days of rallying on extremely below average volume for a Santa Claus rally. But the V-shaped swoons and that weird rally, and then that swoon, and then that weird rally this time around within the overall structure of the August pattern to now, it's one of the weirdest looking patterns and indexes I've seen. And what's weird is that while a few stocks like Amazon, Facebook, and Netflix hold up, those aren't necessarily the most bullish looking consolidations right now. They're good and they could resolve themselves higher, but it's not great. And what's sad is that those few stocks I brought up, like Google, Facebook, Amazon, Netflix, besides these big cap stocks, most things look like what oil looks like, So on my scans this past 4 days has had a lot of oversold stocks bouncing. So we can't get too excited over the bounce. As you can see, the New York Stock Exchange, this V-shaped move isn't as bad, and that's mainly because there's a lot of oil names in it, and they had some pretty solid moves, so it's almost more U-ish here. But if you look at the S&P 500, it looks absolutely ridiculous to me. This is really bad. The bot pattern's even bad for an index. And I mean, when it sold off on July, the rollover here, the barely get to new highs, and the swoon in August, the weird wedge pattern higher here. October, we don't even break to new lows, which is basically considered a non-successful test of the lows. Then we just ramp straight back up above the 200-day moving average on very below average volume, because once we got above the 50-day moving average, volume just went nowhere. Then we swooned down, tried to move back higher, but no volume again. Swoon back down above average volume. V ramp back up, swoon back down above average volume. V ramp back up on no volume. It's an ugly, ugly, ugly situation we have out there. Could it always resolve itself higher? Of course. Any trader that ever believes in his opinion that, oh, this market's going to fall, and then when it doesn't fall and instead you get long signals, you don't take your long signals, that's not a very good trader. That's not a professional. A professional will have a hypothesis on what he believes is going to happen, but if something completely different happens, he will throw out that hypothesis, come up with a new one, and take actions accordingly. So, recently we had a couple of speculative names that produce long signals, and they're still true. ORMP, RKDA, they're still true overall. But besides that, we got two sub $10 stocks and nothing else really showing up whatsoever. So it's hard to get too bullish on this market. The Russell 2000 is still under a strong technical sell signal. The Dow Jones Transportation Average is on a strong technical sell signal. So is the NYSE. S&P 500 still is. NASDAQ still is, despite it being above the 50-day moving average. And like I said, when we received a sell signal back here on the NASDAQ and NASDAQ 100, it is a very rare incidence of us getting, I think it was right here when we switched to sell. It is a very rare incidence of us switching to sell whenever we're above the 50 and 200-day moving average. So very, very, very rare, which just tells you that there really is some problems with the market. And if we look at the oscillators on the NASDAQ 100, you can see MACD, no really bullish divergence, and it's still moving down. TSV still had, we don't see higher highs, higher lows. Stochastic still moving down. RSI still trending down. Moving over to the NASDAQ, since that was the NASDAQ 100, similar situation. RSI, there's no positive divergence yet, so there's no reason to get bullish there. Russell 2000, pretty ugly still. Everything is still on a very hard trend down. Stochastics is trying to coil up, but until it gets above that moving average, it's really, too early to be looking at anything. And RSI is starting to build a series of higher lows, so that is positive, definitely, to keep your eye on the Russell 2000. because we're going to want to see that lead at some point before a rally can actually start and sustain itself. And then the S&P 500, MACD is pretty bad. TSV still, we don't have higher highs and higher lows, still trending lower. RSI is trying. We do have a series of higher lows, but could easily roll over and move back down. So, until we see higher highs, we really don't have anything there. And stochastics shows the same thing. Nothing really that great. Now, looking at one of the weakest indexes, Dow Jones Transportation Average, all this looks like is just a temporary bounce. No real positive divergence. We are back above the moving average line, so it is possible that that can continue. MACD still racing down. TSV still no positive divergence. So all of these indexes look ugly. It doesn't make much sense that people are getting more bullish on the indexes here. Very, very weak structure. Like I said, most of the action, recently came with solars and oil stocks bouncing, off their lows. So it's hard for me to get too excited whenever the oil stocks are kind of what everybody's interested in. And if commodities do come back in fashion again, by the way, if that does start to happen, I don't see how that's necessarily bullish for stocks. It seems like it's a rotation out of stocks into commodities, but we'll see. It's all speculative right now. Right now, the best play is cash. And for the holiday shortened trading session on Thursday, there were no new signals. We continue to be impressed by JRJC. Remember, on an end-of-day basis, JRJC would have been along here had it closed in the more upper, I can't really get it, but as you can see here, the wick is larger on the top than on the bottom. So if it would have probably closed around, 635, 636, JRJC would have been along. And we would, in 4 days, we would have a gain of 7%. But still, this is one of the earnings winners we've been putting on our pre-market watch list every day, along with TXMD. TXMD is better, though, because it's still hitting new all-time highs. JRJC still has a lot of resistance overhead, as you can see on this chart. But both earnings winners are doing good. But besides TXMD and JRJC, and they're not even really that exciting of movers, not really as of much interest to us at all. I think I flagged one other stock, but since I can't even remember off the top of my head, it doesn't matter. And then NVCR is a 50% sell signal on an end-of-day basis. It's not only closing below the 20-day moving average, but 25.93 is lower than the 26.02 low of day of the sell-off session on above-average volume. So the 20-day moving average and recent support eclipse of that makes it a 50% sell signal. I have my stops too tight, and I had 100% of my sell stop here. Should have had 50% of it here and 50% of it here, but since I made that mistake, I've got buy stops to trigger if it breaks out to new highs here. However, if it retakes out this high on strong volume and a strong BOP surge, I'll go ahead and rebuy it early. But once again, it'll only be half because no matter what, I would be out of 50%, but I moved my stop too tight on this one. My final stop was 26.01. Should have had half at 26.01 and half at 25.02. But, lesson learned. All right, everybody. Hope you all had a very Merry Christmas. I will see you in the chat room on Monday.